Okay, so hi everyone, and welcome to the Financial Astrology event. So basically, the event is a collaboration between the Investment Club and Outlook, and I'm a member in both. So basically, I'm a staff writer for the business section at Outlook, and I'm also a member of the Investment Club. So today we have the pleasure of having Mr. Henry Weingarten, who is the managing director of the Astrological Fund. So I'm going to leave the floor to you, Mr. Henry, to introduce yourself.
Okay, well, welcome everybody. We have a somewhat interesting topic today. Uh, Finance, of course, you're all familiar with, but I suspect most of you are not familiar with either astrology or financial astrology. So we're going to talk a little bit about that and how it changes the way you look at markets. I've been doing this for over 50 years, so we have some experience in the field. And while I was trained as a mathematics major with a minor in psych, in a Western university, even today, I find it very strange that the planets do correlate to what happens in the market. So we're going to talk about that in some detail. So we're going to cover basically what is financial astrology, what's its value, and then we're going to talk a little bit about markets and why it actually is different this time, which is something they always say. We'll give you a little bit about our market views, and the best part, of course, are questions and answers. And we'll be talking for about 20, 25 minutes because we want to give you a lot of time for any questions you may have. If you think about astrology, it's been around for 5,000 years plus, as far back as recorded history and even prehistory. Times in the past were somewhat chaotic, but if you looked at the heavens, there was a certain type of order. Every day the sun would rise, every day the sun would set. You had a lunar cycle that went from new moon to full moon to new moon. There was an order there. And at a certain point in time, people realized that there is a relationship to what happened in the cosmos to what happened on Earth. In terms of financial astrology, it was used at times like for Egyptian astrologers would try to predict when the Nile would flood, which is very important for agriculture and finance. And of course, they would look at the horoscopes of kings for what would happen to the country. So what astrology is it forecasts, personal astrology, a person's character and future life circumstances based on the time, place, and date of birth. And just as an astrologer can look at an individual horoscope to forecast their future, a financial astrologer can look to the heavens for stock market guidance because markets have horoscopes, countries have horoscopes, stocks have horoscopes, investors have horoscopes, even financial advisors have horoscopes. So we're just suggesting this is another layer that you can add when you're trying to make money in predicting the markets. There are basically two types of financial astrology. What most people do is number two, which are planetary cycles. So they'll look at planets like Jupiter and Saturn, which we'll talk about, or Saturn and Uranus, and we'll relate them to economic and market cycles. And that's what the majority of people do. On the other hand, if you were trained as an astrologer, which I was beforehand, then we look at the horoscopes of New York Stock Exchange, various countries, and we make forecasts based on that. So there's two different issues. One is based on the individual time, place, date of birth, and the other is based on just planetary cycles relating one cycle to another. So what's the value of financial astrology? Well, basically, it's not what you know, but when you know it. So to me, financial astrology is the second best tool for forecasting markets. And the best tool is not, by the way, technical analysis. The best tool, of course, is insider information. But insider information is not legal, so we don't want to talk about that, and we don't want to use it. So if you want to be legal, then we suggest taking a look at planetary cycles, because astrology can act either as a microscope, which giving a forecast in the next few minutes, or it can give a forecast 5 years out. So it can be, you can use it either way. Now, of course, it's not a perfect tool, and we'll talk about that as well, but it's definitely a component. Basically, what astrology is behavioral finance. When I was first a student, I would listen on the news that today the market's down because the bond market is up. And the next day, I would hear the market's up because the bond market's down. I'm saying, wait a second, you just said the reverse the other day. And that's because what it does is it measures how people react to markets. So it's not so much events, but how people react to those events. And behavioral finance, of course, is a very, very big area today, but it's been done for 5,000 years by astrologers. That's what they were doing. They measure why people go a certain way, and then the next day they go totally different on the exact same news. And some of this, not all of it, some of this is measured by astrology. So again, market psychology and astrology. I define this as market psychology based on astronomy. And for myself, it combined my three interests in life, which is astrology, finance, and wait a second, astrology, finance, and psychology. Anyway, so that puts it together. So if I'm looking for investments, I primarily look at fundamentals in astrology. And if I'm trading, I primarily look at technicals in astrology. If you're very lucky, and it's very rare, you get all three lined up. So if you can get fundamentals and technicals, you tend to do better. And most people today, if they're fundamental analysts, they will tend to use technicals. Although when I was doing things in the 80s, that was very unusual. Today, of course, it's very common. But if you can put more than one element together, then you're going to have a better result. And in astrology, we have a statement that one indication is a possibility, two is a probability, and three is a certainty. So if you can get a lineup of fundamentals, technicals, and astrology, you have a home run. But if you can get two out of the three, you generally get very good results. When looking at markets, we primarily are top down. We look at the planetary themes first, and then we look at the horoscopes of countries, stock sectors, and then individual companies. On the other hand, we sometimes go bottom up, and we look at the individual stocks. More or less speaking, what happens to any stock, 50% is what's the broad market is doing, 25% is sector-based, and 25% is individually based. That is to say, 75% of what happens to any stock's movement has nothing to do with the individual stock. It has to do with the broad market and its sector. So if a sector is hot, if we take electric vehicles, and if we take the market is hot, then you're going to get things like Tesla and Rivian going on. If, on the other hand, if it's the reverse, it's going to be very hard. So while we do look at the individual stocks, we do want to look at the broad picture because that's generally what's happening. Or as you probably know, don't fight the trend. So we look at 5 elements that we think are knowable for markets. First is fundamentals, which we all can look at, and that to me is the most important, because while fundamentals do not in the short term rule the market, in the long term they do, but the long term can be a very long time. The second is technical analysis, which is certainly an incredible important part of the markets, although, as I said, even up to the 1980s, it was considered voodoo, just to chart time and price. But today, of course, it's extremely important. Market timing, market psychology, and geopolitical events. So each of these have an effect on, and each of these have various horoscope indicators. Okay. Now, generally speaking, most professionals have a view of the markets. If they're going to use astrology, they're going to use it as an add-on. And when we used to advise other people, what they eventually got to do was, let's say they were bullish in the market and I was a bear. Well, they would tend to be a little bit less bullish in their bets, or vice versa. On the other hand, if we both had the same views, then they would tend to make a larger bet. So it's not necessarily you negate what you're doing, but you moderate what you're doing if there's an outside effect. So we believe that these The factors can be charted. And again, they're not perfect charting, but there are various patterns. And when we see certain patterns in the past, then we presume the same patterns are going to happen in the future. Now, they don't exactly repeat in the same way, but there's a similarity. Of course, you have to use this in combination with other views, such as money flows, momentum indicators, support and resistance. But if you only had to use one tool, I would claim I would use financial astrology. So what is its edge? It gives you an early alert. So for example, I came into the stock market, I'd been an astrologer for a while, in 1987. And the reason I came in is a friend of mine, Charles Harvey, told me a year in advance to the day when the 1987 crash was going to take place. And lo and behold, it took place on the day he told me, which I thought was pretty impressive. I then, at the time, had a bookstore, a publishing company, a computer company, and I stopped paying attention as well as a financial astrology practice. And I then went and started spending several years to studying financial astrology, taking the information I had and then relating it to stock markets. So I had to decide, how could I get my reputation? Well, the 1987 crash had already been predicted, so what was there to predict? And in those days, the Tokyo market crash was a little bit like our market. It was totally beyond measure. And everybody knew that the market was going to crash, but week after week, month after month, it just kept going up. So I made a forecast, which was 2 years out, when the Tokyo market would crash. Also, one of the U.S. Mideast, no, not that was in the U.S. Mideast War, the next recession, and then I forgot what the third thing was. And I sent it out to 100 press organizations. 2 years later, to the week, we were correct within a few weeks, Tokyo market crashed, and Barron's had kept it on file and did a story on me and say, this guy called it. And from there on, we started developing a long-term record on markets. And in the beginning, I made a mistake. And my mistake was I was trying to predict events. But the answer was you had to predict the market's events. So I'll give an example. We predicted the first U.S. Mideast War. Also 2 years out, we were wrong 4 hours because we didn't know about nighttime bombing. And everybody who had bet that the war was going to take place was short. And everybody who thought the war wasn't going to take place stayed long. Well, we were correct about the war, but what happened was it was, quote, an easy war, and then therefore the market just blew it off and went up. So I was absolutely correct about the forecast, but I was wrong about the market reaction. Fortunately, I was trading with a professional trader, and we played some volatility, so I didn't lose money, but I had a great forecast, and it was a very important lesson to me. It's like, how does the market react is much more important than what the event is. So astrology is a first alert. All financial analysts promise one thing, to make more money with less risk. And we think we do that with astrology. So again, I'm sort of repeating myself here. And we're going to give some examples. I mean, I know talking some generalities here, but we're going to give some specifics about how that can happen. Whoop, that's a repeat. One of the things also, before we get to specifics, is when to sell. Most beginners love to buy stock and make a problem because they don't sell. And one of the things you want to do is, once you have your targets met, or if the astrology changes, you either want to sell your stock or you want to stop your stock. Okay? So this is just a very important area. It's not only about buying, it's also about selling. So let's talk about some astrology now. The basic great conjunctions with the two big planets, Jupiter and Saturn. We just had a conjunction recently in 0 Aquarius. Now, in the year 2000, we had the last Jupiter-Saturn conjunction, and basically the forecast for that was that the world would become more global and telecommunications was going to be increasingly important, which of course was a very valid forecast. So what was our forecast for the current one? Deglobalization. because it's in Aquarius. For those of you who know a little bit of astrology, Leo is the king and centered, and Aquarius is opposite of that. So it's decentralized. So it's the opposite of being centralized. So it's deglobalization with decentralized connectedness, IoT, Internet of Things, and also space exploration important. Like, why in the last 20 years was there no space exploration? We went to the moon, everything stopped. Now you have all the billionaires going to Mars and moon, etc., because of this conjunction, or at least that's what astrologers would claim. And we claimed this 10 years ago, not claimed it, last week. So this is the big picture, the top level. Anyway, so for those a little bit about Aquarius, it's both good and, like all signs are good and bad, just like fire is good and bad. The question is, will this be, a little bit of Big Brother, which is the danger of what we're seeing now in the world? Is this a much more positive, the traditional idea of peace, love, brotherhood? Remember, it's 0 Aquarius, so it's just the very, very beginning. I don't need to go into that. And this is a little bit about the Sabian symbol, which is the image for this, which is to develop a place where you can be safe. And we know how important safety is these days. Okay, that's unnecessary. The Adobe mission, which is this is again the very top level, we're going to get more specific, has to deal with basically a community and safety, infrastructures. Okay. Now, here's more specifically the astrology for 2021 and 22. The blue line is that December's Jupiter-Saturn conjunction, which is going to be around for 20 years. Okay. And you could have played it with the SpaceX and all this sort of stuff. Now, you see these little things about Saturn and Uranus. Saturn is very often reality, and in astrology, it very often indicates a down movement, whereas Jupiter often indicates an up movement. Not 100%, but usually so. So we would have forecast in February a down movement. In June, we would have. However, we notice in December 24th, we'll talk about the moment coming up. We're expecting a very strong down movement. By the way, this is good for a month because this is a broad picture. Then we have to refine it. So let's see what the charts look like. What happened in February? What happened in June? And of course, we can't talk about what's happening in December. Of course, we're bearish for that time period. So if we look at these charts, we'll see we were in an up market. So if we take a look at February, you see the market went, topped, went down. So we had a very good short-term trade, but the markets didn't continue. So one of the things that financial astrology do is it gives you very precise time for the markets to do something or not. So it was a very successful trade, but it didn't go where we wanted to, but we took our money to the bank. Now, the next time, same sort of situation. We got this movement here. So we got the start of a trade. It worked. If you just held it, you got stopped out. If you traded it intelligently, you took half your profit in the next day or two, and you went further. Now, what's going to happen up here? I believe the markets have topped or are topping, and we can go substantially lower. But that's the December timeframe. The question is whether people will keep the markets up to the end of the year to take their profits, or they're going to wait till the end of the year or the beginning of January to sell. But it's our bet, in any case, that the markets will be coming down because they're certainly much too high. So on our YouTube channel, and we put some of these forecasts up in detail. On our last one, we gave 3 big swing trades that people can do because we certainly make forecasts every day. And our 3 big forecasts were first U.S. bonds, because it's clear inflation is 5, 6, 7, 8%. So to have bonds at 1.2 and 1.3 was just a no-brainer to sell bonds. So our big trades was constantly selling bonds, but if the market went way down, then people were going to buy bonds for safety. So it had to be constantly bought, sold, bought, sold. But nonetheless, it was an obviously winning trade. We did it at 125. We did it at 135. And, this made lots of money for clients than ourselves. The second trade was half good because we got the 5% sell-off in September, which, by the way, I thought would be 10%, you know. But we made our money. We played it again in October and didn't make money. So it's not bad. And for silver, we got our money because it went from 22 to 25. We still like silver, by the way. But so all three of these trades, which were basically astrological trades, did extremely well. Not perfectly, because not every trade is perfect. Astrology is not the only factor in the marketplace, but it's a factor, and therefore it can be very helpful. So silver, for example, this is a little bit for those of you that know some astrology, because it's a little technical, but basically you can just correlate the planetary cycles to market cycles, and there's software to do that. Or you can activate a natal horoscope by a variety of techniques: transits, geocentric, sidereal, heliocentric, solar and lunar returns, progressions, solar arcs, and Hori astrology. And probably 90% of you don't know what I'm talking about here. But if you spend the next 2, 3 to 4 years studying astrology, you'll know exactly what we're talking about. But in any case, there are a number of techniques. It's not very simple. It's not like you just plug it in and you make money. For example, in 1987, when people saw that various astrologers, not only Charles Harvey, but other people, Arch Crawford, had called the forecasts, 6 months in advance, a year and months to the day, everybody was doing financial astrology, but they weren't making money because it's a dual specialty, just like medical astrology. I can't do medical astrology because I don't know a thing about medicine. I can't do astrometeorology because I don't know a thing about weather. But I've also been trained as an RIA, a CTA, Series 65, Series 7. So I was trained in markets because you have to know how the markets respond. So in the beginning, everyone thought they knew what they were doing, and they ended up losing money, but that's okay. So if we look at a chart of silver, you're not going to how did that happen? Back. Whoop, is this going to show? What? Oh, hard time, guys. No, sorry. I was going to show you a chart on the silver. We'll have to put it up. But basically, it's a horoscope. Maybe after this, I'll do it. And it would show you how to do it. But most of you would not be able to read it unless you were trained to do it. But in any case, that's a little bit of some generalities about astrology. Let me talk about what the markets are, and then we'll take some Q&A. Okay, this is my view of what most markets are doing today. And I think they're absolutely insane. And so we tend to be cosmic value investors, which means I look to the cosmos and I look to value. Now, of course, you can make money in many ways. You can be a momentum investor. You can do lots of things. But this is sort of the valuation. What is very important for you all to realize is that the markets are totally different. They're not what they were 20 years ago. They were not what they were 100 years ago. Now, the first change was 1971. And 1971, forget about the gold market, going off the gold market, was because this was the introduction of fixed options. Because before 1971, if you were bearish on the market, what did you do? You sold stock. So markets went down. But after 1971, you could buy puts. And if you bought enough puts, it would hold it, and the markets would then go the other way. So it changed the dynamics. So even if you're doing research on markets, pre-1971 and post-19 are totally different because the reaction of people to sell. But today it is different. And they always say it's different this time, and it never is. This time it is different. If I had told anyone 5 years ago there'd be negative bond rates and I could get oil that give me $40 a barrel, it went to minus 40 something a barrel, to pay me to take oil, I'd say, come on, you're on drugs. But it was. And the reason is because it's computers today. It used to be individuals trading. Now it's computers that are trading. And computers have very different parameters. So number one, it's different because there's less and less reality to markets. It used to be that the economy was forecast 6 months in advance by markets. That's not at all true today. The second is the coronavirus. It's like a totally different ballpark. I don't think, if you remember how it started, nobody predicted we'd go to lockdowns, that if one person had it, they would lock down 30,000 people. I mean, it's total insane for public health. But the point is that's put a new wrinkle into markets. But the third is the following. Today, more than 25% of the people in the markets have been in a year or two. They have no idea. They don't know what a down market is. So they believe you buy every dip. I think that's ending. We're in the process of ending that now over the next month. But as long as they felt you buy every dip, and it worked for a while. The second is up to 90% in volatile markets of computers trading with each other. It's not people, it's not you and me, it's not being worried. And the third thing is that trading times are vastly reduced. It used to be that if I had a 20% target for a stock, it would take 2 to 4 months to get there. Now it can be 2 to 4 weeks or 2 to 4 days because everybody's computer has the same target. Off they go and they're there. So you have to constantly, because of these time frames reduced, as traders, you have to use a shorter time frame, and as investors, a longer time frame. The intermediate's a little bit more difficult. So there are key differences in markets today. So what are our forecasts? Well, I put this out a few days ago. Goldman Sachs is saying we're going to 5,000 S&P. Several of the others were saying 4,400. Where are we at the moment? We're at 47. Oh, see, we came back down today. We're basically on the U.S. holiday mood, so the market was way down, and now it's back to being sort of positive or ignoring things. I'm on the camp that we're going to get to 4,400, not to 5,000, although eventually we usually get to both sides. When you have big players playing both things, it's just which comes first. But I think we'll see that as we get to Christmas time or post-Christmas time, early January. Because markets are too high, we made plenty of money during the year. We're mostly standing aside. We're short a little bit, excuse me, and we're primarily defensive. Now, how well that works, that involves a lot of trading. We personally have a lot of cash levels, no margins. We write calls, we hedge, but we do a lot of short-term trading and pairs. So that allows us to not worry about what the markets are doing. But I'm not comfortable owning most stocks at current prices. How do you bet on inflation, which is one of the big issues now? I mean, clearly inflation is high, and it's certainly much more than 5% in the United States. But gold and hard assets, and it's very interesting how the market's been selling gold every time there's inflation, and yet one of the main reasons that people buy gold is for inflation. And that's because there's a total disconnect between gold investors and the futures market, which are run by computers. So computers are programmed every time there's inflation, they sell gold. And on the other hand, people keep buying it. So there's a different dynamic going on. Low-end stocks, so that a lot of people are going to be squeezed. So stocks like Dollar General, which are a little bit like McDonald's, are going to do well. And luxury items do well because people have money going to spend it. So blue chip art does very well. We're dealing with some luxury resort hotels. While the regular ones were in trouble, the very first ones to go were the ones that to go up were the ones that have money. Private equity, and private equity obviously does well. Doesn't have it. It's expensive today, but it's a good way to bet on inflation. Tips, but I prefer to short bonds. Tips give you some response, but shorting bonds does well because clearly we're going up to 2%. So when do you have to worry? We have the various canaries in the gold mine. The first is the bond market. So we're in that range. I think we're going to go above 175 because inflation's 5%. So how long can the Fed be behind the curve? The question is, how does it get there? I used to have Tesla in here, but Tesla's out of their minds at the moment. So I put instead Ribbon, and Ribbon loses money. It's like what broke the 2000 market was when we had internet grocery stocks that went to the moon. And they had no profit models. Well, Ribbon has no profit model. It's bigger than every other car company with the exception of Tesla, and it's a joke. Now, eventually that's going to go to zero, or not zero. It's going to go to $10, $20. But at the moment, so when it gets back to its offering price, that's another thing. The VIX is another one. Bitcoin, I believe it's a pyramid scheme. Doesn't mean you can't make a lot of money in it. Doesn't mean it's a barter club. But eventually we think it's going down. And when it gets down below 44,000, people will realize, that is to say, when they realize you can lose money in the markets, there's going to be a run for the exits. And then finally, a stock like GameStop or anything equivalent, which should be selling at 1/4 or 1/10 of what they're selling at. But at the moment, people are still holding it. You have very A lot of newbies in the market, they're slowly losing money if they're not manipulating, if they're not rotating their stocks. If they stay in what they have, they're going to lose out big time. But if they rotate, they can stay ahead of the curve and make money. So, okay. So what we're going to do is take some questions. I think I went a little bit over because you may have some questions here. We do have December 21st, our year-end forecast for next year. You can go to our channel, see what we said last year. It's on YouTube. But the next one, if you want to join it, is December 21st. And I guess we'll take questions and answers. Let me just see. Oh, just want to talk about one thing. I incorporated our fund May 2nd, 1988. And at the time, I had a computer company, and we were one of the first Apple dealers in New York City. And my attorney thought I was absolutely insane because I went up to Albany to incorporate it. And I said, no, next day astrology is going to be in the news. And the next day, the Nancy Reagan story broke on astrology. And for 3 days, I did nothing but press interviews. So it was our first forecast, and it was to the penny. So we were rather proud of that. And one other thing, if people say that they're never right, astrologers are right and wrong, obviously. But if you're listening to anybody who's always right, there's something wrong with it. They're either a liar, a beginner, a con artist, they have short-term memory loss, or they only backtest, because nobody's 100% right. So I want to point that in here. So, and I'm going to give one last example of Bitcoin, which I don't like, so I only short it periodically. And the first time we did it I was asked to do it. It was about 3 months in advance. We gave the day that Bitcoin was selling at 19,000, which was perfect to the day. Pure astrology call. The second one went to 60,000. It was a technical call. I sold it. The third one, selling was at 52,000, is when El Salvador said that they would basically adopt Bitcoin. So that's the Time Magazine moment. We made money with that. The fourth one, we lost money on. It was a fundamental play. China made Bitcoin more illegal. They're not shooting the people yet that do it, but each time they're eliminating it. So we did a short there, and that one lost money. We got stopped out. Then it's 66,000 again as a double top, and we made 10% on it. And then we did, again, a technical short at 68,000, made 15% plus. So as you say, sometimes we just do it technically. It's too much work to do the astrology in this case. But it's an example of 5 out of 6, and that's certainly good trading. So I'll be happy to take some questions.
Okay, so whoever has a question, you can put it in the chat box. Okay, so I have a question. I heard about your opinion
Yeah,
on
where's the chat box? One question. I have a question for you. Where's the chat box? Because I don't see it.
find it when you go up. You have like a. You can
If
just
not, you're going to have to read it to me. 1 second. Yeah, I'm sorry, folks. I haven't used this one before. There's like a dozen,
read them
so I have
out.
not used.
I
1
read
second.
them out loud.
Well, I don't see it, so I'm afraid you're going to have to. Well, let me take your question because for some reason I don't see it.
It's okay for the questions in the chat box. I think you can see them when you leave the presentation, but I will read them out loud for you.
Okay.
Okay, so my question is, okay, we heard about your outlook on Bitcoin and that you're expecting it to fall, but what is your
Always,
yeah,
by the way.
what is your okay, from a financial astrology viewpoint, how do you view the crypto market?
Okay. Well, there are 2 parts to it. You have to understand that governments do not like competition. So in China, the reason this is legal is because this is primarily a fundamental view, not an astrological view. It's a fundamental view because governments do not like competition. And you have countries like China that will not allow the digital yuan to have issues, which is why it's illegal, forgetting about how unenvironmental it is and how much electricity it uses. Basically, governments want to tax you, and they don't like money laundering. And early on, this was great for avoiding taxes and money laundering, which it's becoming more and more regulated. But it was the Wild West. There was lots of illegal trades through Tether, which is half of fraud, never been really audited. So there's a lot of fraudulent involved. It can be regulated, but it's a barter club. Now, what people think is that it's immutable. It's not. With quantum computers, you've got nothing. Once quantum computers come online, your safety is gone, at least according to current situations. But the main reason is governments don't walk it. On the other hand, we talked about decentralization, which is part of what's going on between now and 2040. So I think things like stable coins have value, that not made up stuff to solve math puzzles, which has zero value. But if you take a stable coin in gold or you take part of the Empire State Building, I think that's a legitimate way to do things. It depends. It depends on your view of the metaverse too. But effectively, to me, it's more fundamental view than an astrological view. So I just use the astrology and technicals to know when to sell it, because sooner or later, I think it's going in the toilet. Now, it may take 10 years for it to go to the toilet, and you can make a lot of money trading it long or short. There's no question about that. But it's not a real asset in my mind. So I just look from my fundamental view, when can I sell it and make money?
So you just mentioned the metaverse. Like, how do
Yes.
you think the metaverse is gonna affect the markets? Because I know like a few like stocks and a few also crypto coins were like going up when the news started going public.
Again, this will be talking a little bit about my age, but I'm still living in the real world. I still prefer real meetings to WebEx meetings. I think there's value to it, of course, but I don't think it's a substitute for reality. And for some people, I think it's a substitute. So you can be a billionaire in a metaverse. I don't think it's very real. So obviously, there's a lot of money to be made in it, both as an investor and as a trader. I hope it doesn't take over reality, though. So it's a question of being cautious. But on the other hand, if something's too good to be true, if it's pie in the sky, it probably is. So you have to be aware of whatever the promises are. Because right now, there's a lot of froth in the marketplace. As the US Fed, for example, will raise interest rates, that's going to get rid of a lot of the froth in the marketplace. So while we could go a little higher, and we've gone higher than I would have expected, the risk reward is increasingly great. So if you pick a good company, you have to remember one thing. It took me 20 years to learn this, but I was told that the stock market is like a beauty contest. And in the beauty contest, it's not what stock you think is best, but it's what other people think is best. So for example, I always thought Tesla is a joke. I mean, there's going to be, eventually, I don't think they're going to be the winners in what goes on. But it doesn't matter what I think personally, because other people think it's, the holy grail. So the stock goes up because the majority of people think it. So you have to look at, so when you look at metaverse, it's really what other people think. Because if they're willing to put their money in it, because money flows is the biggest driver. Forget everything else. Forget astrology, forget fundamentals. What you want, if you had to only look at one thing besides astrology, but if you don't use astrology, look at the money flows. If money's going in, it's going up. If money is going out, it's going down. That's the biggest driver of markets. So the metaverse is, if people believe it's the future, they're going to buy it if it's the next hot thing. And usually with hot things, what you find is in the beginning it goes up, then it goes down a while, and then some of the survivors really do very well. So it depends on what you're looking at. But it's not an area we look at. We primarily invest in the precious metals and mining. We do healthcare. We do technology, media. I mean, but so we can't study everything. You always want to look at what's your edge in marketplaces. I always find it amazing that people think they can go against Goldman Sachs with their 100 PhDs, with their supercomputers working 24 hours a day, and they think they're going to win. Well, at the moment, they've won a little bit in the shorting they've done, but eventually I think they're going to lose out, because that's not how it wins. That's not how it works.
Okay, so we have a student asking in the chat box, for a student with a little money in the market, would you recommend taking some profits soon or to wait out the correction? Also, do you think a correction is bound to happen in the short term?
Okay, well, first of all, I always take profits. You never lose by taking profits. The problem is most people are greedy. There's a saying in the markets, bulls make money, bears make money, and pigs lose out. And that's because if you're making money, you must take some of it off the table when it reaches what you think is real. The question always is would you buy this stock or instrument at today's prices? I don't care what you paid for it. And the market doesn't care what you paid for it. So if a stock is trading at 1,000 and you wouldn't pay more than 700, you either sell it or you put stops in. If you think, on the other hand, it's worth 2,000, then you don't. Although if you have good, the most important thing when I teach markets, the most important thing is money management. It's not what the markets do. Predicting where the markets go is the least important thing. The most important thing is money management. The second is choosing the right instrument. And third is having some idea about the markets. So I used to know people that were options traders. They were right 90% of the time, 90%, and never made any money. How could that happen? Because on that other 10%, they would take unlimited losses. So I think if you have a profit, but if you're comfortable, my viewpoint is I think markets are insane. They can stay insane a lot longer than I predict. I would say in the next 30 days or 45 days, they should be correcting. On the other hand, Goldman Sachs says we're going to 5,000, and it's not always good to go against them. But if you have good profits, there's nothing wrong with taking some off the table. Now, we've been a bear and shorting the market so much. How did we make money? Well, because like in those two times, when we had a very quick profit, we took some and the rest we held, and some of it got stopped at even. So we used stops, didn't go as much. Whereas 2 years ago in the spring, we predicted correctly that the market would go down 10%, but it went down 30%. I was shocked. I mean, we got our 10%, then went down about 25%. We bought like crazy because they said this is ridiculous. But you have to have liquidity. So it depends if you're using margin, because if you're heavily on margin and things go bad, you're in real trouble. So at least reduce your margin. Again, I don't know the specifics there, but I tend to be conservative. Now, other people tend to be aggressive. That's what I'm comfortable with. You have to work with what you're comfortable with. If you have good profits, you never lose money. Take some, at least some money off the table.
Okay, so another student is asking, what is your outlook on gold?
Okay. Well, I'm a Leo, so I love gold. So I think it's insane that it's as low as it. Let me just take a look at the gold market. Just 1 second. Okay, gold today is at 1789. It's an obvious buy. So you guys can see me. So it's an obvious buy here. It's worth about $1,850. You generally do better by buying gold stocks. However, we still like silver a little bit more because silver is also an economic metal. So it depends on whether you think the economy is good or not, or bad. If you think the economy is good, you want silver. Also, if you want to bet on, things like lithium and things like that. But we like gold. I think it's insane that it's down here. I would certainly be a buyer here back to 1850. It could go to 2000. I mean, there's enough crises in the world that we have 4 drivers for gold. So gold is something we certainly like. It's not as popular as Bitcoin, obviously, but it's certainly something that belongs in portfolios now. And certainly when it's cheap, you want to own some. So we definitely like gold. Was there a second part of that question? I'm sorry. What did I answer? Wait, I can't hear you. Are you talking or what? Wait, something's here. Hold
I
it.
think you're muted.
I forgot to unmute.
Did I mute? Oh,
No, no, no.
how'd that
No, okay.
happen?
So there
Am I
wasn't
okay now?
Yeah, I can hear you.
Can you hear me?
Yeah.
Okay, sorry.
Okay, so there was no other part of the question. That was it.
Oh, okay.
Okay, we have a student asking if someone wants to start some basic reading on this, like financial astrology, what books would you recommend? Do you favorite any literature or blogs on this? Any references?
Okay, well, you got to understand one thing about financial astrology is that the really good stuff's not in books. So basically, because there's unfortunately in the market, once what you know becomes public, then it becomes less worthwhile. So you do want to see what's done, but generally it's almost doing your own research. There are blogs. I wrote a book that's just out of print, but I think you still can get it, called Investing by the Stars, which was published by McGraw-Hill in 2000. It's a little bit out of date, but if you can get a copy of that, that has some value in it. Just be wary of what the claims are. I tend to do my own work, so I don't really look at other people's work. But there are a number of these things. I would go on the web and take a look at what you can find, and also test it out, because unfortunately a lot of astrology is still back in the Middle Ages. So just like you wouldn't do medicine the way it was done in the Middle Ages, you shouldn't be doing astrology the way it's done in the Middle Ages. Uh, so it's a very good way to test out theories, because I can predict the market up or down, and I'll know in the next day or two. Whereas in an individual astrologer, if I predict you're getting married in 3 years, I got to wait a long time. Where in the markets, I can make forecasts every day, short term and long term. So I'd look on the websites, and there are financial astrology websites, and take a look at them. But be very, very leery of promises. They should be an add-on to what you're doing on some of the cycle work, and they'll give you a sense of it. So I don't know how to answer it beyond that. Sorry.
Okay. So another student is asking, you said if you see something as too good to be true, it probably is, but by using financial astrology, you would get more money with less risk. Doesn't this sound as too good to be true as well?
No, because every financial analyst makes that promise, because it's primarily risk and reward. It's just, if what we do is, when you're trading, for example, let me think about that. It's sort of risk, reward, and probability is what you're doing, or you're investing. So what's the risk? What's your reward? And what's the probability of being successful? Well, just by adding the level of financial astrology, you're getting a higher probability of what something is. So I don't think it's a promise that everybody makes. Whether they keep it's a different story. But every financialist analyst across the board does make that. I mean, that's why are you using that person rather than doing it yourself? Hopefully, he's making more money for you than you can do yourself. Um, so I don't think that's too good to be true. Now, on the other hand, if I told you, as some people I know are promising 20% returns a month, I think that's too good to be true. Now, if you can do it, but the risk level's too high. So yes, you can make 10, 20% a month. Hell, I can say put everything on red and see what happens. So the question is, like a lot of people are doing that in Bitcoin today. They promise you 10 to 20% returns. And I think that's a little gaudy. And it's somehow, when you start working with them, you don't get those returns. And I'm sure you've seen this not just with Bitcoin, but with many people. It depends, way back, if you're getting even more than 15, 20%, it's what's your risk level. Now, in today's markets, you actually can make a lot more money because it's volatile as hell. You've got a lot of amateurs, which means it's very easy to play the game because they don't know what they're doing. But we have a 25-year, wait a second, 1987, 13. We have a 35-year track record that's second to none. And you can look at our forecasts back for 20, 30 years, and they're generally right. Like, we used to make 5 forecasts a year, and 3 would be right, 1 would be wrong, and 1 would be half right. And that's very acceptable. It made money. I mean, the question is, does it make you money? You only use a financial astrology or any other tool if it makes you money at a reasonable risk level. Is the forecast accurate? Is it precise? So I gave 3 forecasts we gave beforehand, and they were very precise, and they made money. Now, not perfectly, but they made money, and that's what the game's about. So,
Okay. We have another question about Bitcoin. Now, you might have answered it in the presentation, and I'm gonna add a few questions to it. Do you believe that Bitcoin will be the world currency in a few years' time? Would you invest all
no,
your money long term in it?
no, 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 no. And if
Okay.
anything, it won't be Bitcoin. It'll be something a lot better. Maybe Ethereum or something, not Bitcoin. Bitcoin is trash. It has no value. It has no utility. Now, I know they're doing things with Lightning, et cetera, but it's all BS. Plus, it's totally manipulated. You're just supporting a lot of Chinese plutocrats. It's insane. If people knew what was going on, and there's been so much fraudulent trading. Most of Bitcoin, when it went from nothing to about 20,000, was based on 2 trading programs and 1 person, all of whom would have been put in jail if it was done in a legitimate marketplace. So it's a joke. And you talk about too good to be true. Everyone's become a millionaire. It's worth $1 billion. Come on. What is it worth? Now, could it go higher? Could it go to 100,000? Sure. Right now we're trading at 56,000. If it breaks 56, which I'd like it to do, then we can go down to 50 and 40 and blah, blah, blah. But it can also go back up because it has no reality. So you can make it anything you want. In the old days, in around 2000, I was at a major event, one of the big houses, and they asked you about the NASDAQ stocks that made money versus the NASDAQ stocks that lost money. So if you invested in which group do you think had better performance? The stocks that made money or the stocks that lost money? What do you think? I'm putting you on the spot. Which was a better investment? The ones that made money, the ones that lost money?
I think it depends. Like the ones that made money, if they already reached their peak, then I wouldn't invest in them.
No, no,
But
no. Okay, that's not the answer, but it's okay. Good answer. But the answer was the stocks that all lost money well outperformed the stocks that was losing money. In the future, we're going to make billions. But once it started making money, even 3 cents, analysts could then chart, oh, 3 cents, 10 cents next year, $2 next year. And all of a sudden, it didn't go so far. So when it was nothing and all pie in the sky, that's what this Bitcoin is. 100,000, a million, 5 million. You can say whatever you want, but it's got no reality. So, but as long as they put in more suckers, it's a pyramid scheme. And eventually pyramids, if you look at the history, the South Sea bubble, tulips, eventually that's where it goes because it has no utility. Places like El Salvador are trying it, but it's a joke. Our mayor, unfortunately, in New York wants to get paid in Bitcoin, but I think he should, because New York and Texas are trying to become the new cryptocurrencies centers because the Chinese kicked them out and the Turks kicked them out in other places. So, but people are making money on it. But eventually, I don't think so. So it's definitely not going to be the world's currency because what do governments have? Two powers that Bitcoin have. They have the power to tax you and jail you. Bitcoin can't do that. If I don't pay, IRS comes down on me. And if I don't pay them then, they put me in jail. Well, I'm sorry, Bitcoin doesn't have that power. It's no way that's going to be the world's currency. Will it become a barter club? Maybe, but I think there are much better barter clubs to join. So,
okay,
okay.
you mentioned during the presentation that using financial astrology, a lot of people were able to forecast stock market crashes. So, now, based on your point of view on Bitcoin, like, is there a certain point in time you believe that it will fall?
It's too much work to do that work astrologically when you're fighting such insanity. As I gave you our last 6 trades, I did promise if we get over 60, 70,000, I'll do the astrology work and figure out the next time it goes down. But to me, it's such an obvious piece of garbage that it's just a question when people wake up. But it may not come from Bitcoin. Maybe Tesla drops to 300 and people will realize that it's not good. There's too much insanity in the marketplace because there's too much cash floating. I mean, the central banks have flooded the cash and basically interest rates are free. Now, when it starts going up, maybe December, maybe spring, even if it goes up to 2-3%, then some of this will be flushed out of the marketplace and maybe Bitcoin won't do as well. But to me, it's based on the promise that you're going to be super wealthy. And you invest in that. If you did it at 5,000 or 2,000, yeah, you were super wealthy now if you sell it. But maybe it won't be because, at one point, a tulip was a tulip. And at another point, you could buy an estate in Amsterdam. And then the next year, you could buy it as a tulip. But as a friend of mine said, at least at the end, the tulip was a pretty flower. What do you get with Bitcoin? I don't know. So anyway, I think it's garbage. There are stable coins that could have some value, but it's not the area we play in. And obviously, one of the reasons gold's not higher is that many of the people who would have bought gold are buying Bitcoin, but I don't think it's a store of value in the least. So
Okay, we have another question. What are your top stocks to buy now and hold long term?
nothing, because I'm basically bearish. So we have a few things that we're holding. That's a very good question. We are basically highly liquid and waiting for a correction. And if it doesn't, we still had a good year. So I'm not putting fresh money in this marketplace. There are some good stocks that I will probably buy in December or January, regardless of whether or not the market's down. We'll play some January effect stocks. There are a couple of very small, I like the high risk stocks. So there are a lot of healthcare stocks that we're liking that have some promise, some security stocks that have some promise, some media stocks that promise. But at this point, I find the value too much and I'd rather miss it. You know, it's like real estate. You know, people, even though real estate's high, will it stay? There are people now selling hotels in New York for 100 million that they paid 300 million for a few years ago. To me, that's not a good investment. So can it continue up? Absolutely. Can it keep going up? Yes, but I don't like the risk reward. But if it catches our December 21st year-end forecast, we'll give a lot of stocks that we like at that point. That will be either buying then or in January. At this point, I'm on a buyer strike. I won't do it.
Okay, so someone is asking whether you like, and I have a question about it as well. So do you study like foreign markets, like other than the US market, and have you done like any analysis on the Australian stock exchange, or and do you have like any stocks that you would recommend in the Australian stock
I don't
exchange?
like what Australia is doing with COVID, so I don't quite like Australia anymore. In the old days, we played it around 2000, a certain number of, we do a lot in mining, and obviously Australia has a lot of good mining stocks. They also have some good biotech stocks. At the moment, I think the country's totally out of their mind, and I won't invest in Australian stocks. On the other hand, um, I haven't done the work on Australia. It's one of the countries we look at. You know, we look at Australia, we look at Hong Kong, you know, we look at Canada, we look at the US, we look at Germany. Um, but I haven't looked at it for a year or so. And given what they're doing and how they're destroying their economy, I can't easily invest in it. So the only thing we would look at is actually, we do have one stock, Vista. Isn't Vista, Mark, a Australian Montard? Can you quickly, am I correct? Can you let me just check. There's one Australian stock we think is good. Um, we've tracked for a while. It's at 72 cents. It's a gold stock. But can you just double check, Montauk?
Vista Gold.
Yeah, just check where it is. I'm pretty sure it's Australia.
Vista Gold.
Yeah, just where's my
Northern
North Australia? Yeah, the only one we're invested at the moment is Vista Gold. It's a 72-cent stock. You have to hold it for about a year. It's a very good property. I think it will probably be a double within 12 months. We bought it recently around 77, 72 now. So it's a little bit less because gold being down. But that's actually the only Australian stock I own at the moment. And it's just because I know the management. So I was like, there's a saying, you bet on you bet on the jockey, not on the horse. So it's a company we like. See, you can take a look at it. Yeah, I looked at it, but it's basically Mount Todd in Australia, right? Yeah, so that's the only one. But I think it's very sad how they're dealing with COVID, terrible public health policies, and just terrible economic policies. So at the moment, but I may change my mind next year when I look at the horoscope. But with this exception, nothing else we're involved in. Remember, there are thousands of stocks. We can only track maybe 25 to 100. Okay.
Okay, so a student has two small questions. What
Okay,
would you
we'll get
say?
just
What would you say has been your favorite, most rewarding, but not necessarily money-wise investment? And how has the asset management field changed since the global financial crisis?
I'm a Leo, so I like to be right. So to me, anytime I'm right about the markets, I'm happy. But it took me years to have to say, hey, that's not good enough. You know, you have to make money because that's what the game's about. It's not about being right. And for many, many years, I was a very academic person. I was just interested in about being right on markets. Um, and I remember, for example, when I first started out, I was like trading options, and I'd be trading with my broker. We'd play the last week, and the broker would double his money and get out, and I'd hold it and go to zero. And I did this for about 9 months in a row. So finally, one month, I learned the lesson, and I sold the stock when it doubled. And that was the time it went down. It went up 10 times. But what happened was I realized within an hour I made a mistake. I came in again, and I made 4 times my money. So by being less greedy, um, we made much more money. So being satisfied is just being right. Now, the second part, I'm sorry, what was it? The second part of that question?
How much has the asset management field changed
Oh, it
since?
changed? Oh, it's computers. It's not people anymore. Now, in the very old days, it was salesmen. your broker was there and he was just take on whatever his firm told you to buy. So he was nothing more than a salesman. They knew very little about markets. But his main value really was in money management and keeping his clients from going crazy. Because, sometimes put all their money in one stock. Well, you could become rich that way, but you can also lose everything. So his value was more in calming people down. But today it's basically computers, computers, computers. So there are less and less financial professionals, more basically money managers or computerized programs, so the big difference is the use of computers, the domination of computers at times, and also why the stocks have less and less reality. Because, people have emotions and astrology measures those emotions, but computers don't have emotions. So they just play things very differently.
Okay, so it's been an hour, so we're just gonna take one
Good.
more question.
Yeah,
Um,
good. That's the
so
last
now,
question.
yeah, okay. So in that case, what long-term stocks would you advise to buy when the market goes down? Are major players like Apple, Microsoft, Facebook, or Meta, GNG, etc., still strong buys for the next 5 to 10 years?
Depends on what pricing. A year and a half ago, 2 years, we said buy everything. When the market was down 30%, it was just too cheap. Stocks that had positive cash flow and increasing dividends or whatever, very classic stuff is safety. I'm very concerned. There are a lot of world events that could shoot this market down 10, 20% in a day. I'm not saying it's going to happen, but we're in a very risky world. We're always in a risky world, of course. But so the big leaders are certainly at the right price. As I said, I'm a cosmic value player. If something's cheap enough, I'll buy it. Now, what you could look to is simply the 52-year low. For example, we're tracking Disney. Now, Disney's at 150. Its low is 146. Now, when it gets down to 146, you might, because Disney's obviously hurt by COVID, but that eventually will be off. When it goes there, we might say, hey, is that where it's going to stay? We'll do some charts on it, and we might be interested. Whereas a stock like Tesla, even at 600, if it dropped 50%, I don't think it has value. So it depends on what you like. Obviously, popular stocks that are strong. We did buy way back Microsoft, and it made a lot of money. I'm not interested in it now. But obviously, the big leaders, you have to understand now, it's not 26%, it's about 46% of the markets now are in tech stock. It's much too high. Um, and again, it's based on a lot of future earnings, but there are a lot of stocks that are hurt. When it's too delicious, that's when you buy it. But again, you can look at the 52-year low first, but we'll be giving that out December 21st. So what we always recommend for people is make a list of your favorite stocks, make a list of your ideal prices, and if you get it, fine. If you don't, there are always other opportunities. There's never one. If you miss one, there'll be another opportunity. I don't believe in FOMO. So I hope that gives you something to think about. Some of you will perhaps see December 21st, and we'll try to give you some more forecasts then, more specific forecasts.
Okay, so okay, do you have a word, Rami?
Like what? Oh,
I'm
okay.
asking.
Essentially, we're done with the questions. So I would just like to note that I think personally it was very refreshing to hear your perspective on this, especially as students, as young people, we get fall too much into this FOMO, into this hype. So it's great that we get this sort of bear mentality in there. It's very refreshing to see. So that was a very enjoyable talk. And if you have any concluding words you'd like to say, we'd love to hear from you.
Well, I think you have to understand the history of markets. I always like to say when I used to teach this that most people misunderstand what the purpose of markets are. And I'm going to give you my cynical answer. My cynical answer is the purpose of markets is the legal transfer of wealth from the middle and working classes to the ultra wealthy. And unless you understand that, you're going to be surprised by markets. Now, I know that's something they're not going to teach you in school there. Today with computers, they're basically doing things that it's about making money. It's not about anything else. And I'll give a quick story that will point this out. When I used to do commodities up to the year 2000, it was a very easy market. It was all based on fundamentals. All the players were commodity players, and it was very easy to predict. All of a sudden, when hedge funds came in, the game changed because they didn't care about fundamentals. They only care about making money. So they could be buying and selling for the most irrational reasons, such as anyone who sold gold. Yes, the market's doing it. You have to follow it, but it shouldn't be down here. Doesn't matter when I say shouldn't be, based on fundamentals. But they don't care about fundamentals. So you have to look at what's driving markets and what's your edge. You know, this is the only game in town where people think that as an individual, you're going to, as I said, beat Goldman Sachs, with all their PhDs and doing this 24/7. Now, you may have an edge. If you're a student in medical science, you may understand a medical stock better or ahead of somebody else. But it's not a game where everybody's going to make money. That's not how it works. They can make money for a certain amount of time, and whatever the cycle is, it changes. So what's been working for the last 2 to 3 years is not going to work 2 to 3 years from now. So look at the history and you'll see stocks that were the top flying stocks. If you didn't do a rotation around September, you're underperforming the market because the big boys were rotating. So if you just stick with what's going on, you're not necessarily going to make money. So you have to understand what's driving the markets. It's what other people think is valid, but you also have to be buying and selling. It's not just about buying stocks. I mean, you have to look at, of course, if it's tax exempt, et cetera. But it's not an easy game. But if you apply some rationale, I think you can make money with it. And certainly as students of finance, you should be able to do better than the average person. But don't get caught up in the hype. The hype works for a while and then it stops working. And if you look at some of the old things that people were saying a year or 2 or 3 years ago, they're not making money now. So
Yeah,
that's it.
definitely.
Good.
I think we're in agreement on that point. And
Okay.
with that being said, I'd like to thank you again on behalf of all the students who are watching now and who are going to be watching the recording later for the amazing talk. It's been a pleasure hosting you. And yeah, that's it. I think
And
the
take a look
students.
at our YouTube channel. We have a website. You'll find some things there of interest. Anyway, you'll at least hear a different viewpoint in many cases.
Of course.
Okay,
All
It
right.
was
thank you.
a pleasure having you. And yeah, I think everyone is, for me at least, I found the topic to be very interesting because I'm really interested in astrology, but I never looked at financial astrology more in depth. And I will be definitely looking at the books you mentioned, Blessing by the Stars.
Wonderful. Thank you
Thank
all. Bye-bye.
you.
Thank you
Bye.
very much. Bye bye.
Ciao. How do I get out of this? There we go. Okay, absolutely.